right, welcome back, everybody. As promised, we've got a nice comprehensive example of what the income statement would look like. Multiple step, then single step. Also notice how this might make for a good task-based simulation at some point, right? So let's jump in, see what we got. All right, so you open this up, exam day, and you see all this information. What are we going to do? All right, first thing is, let's take a look at our accounts on this. It's not a full trial balance, obviously. It's a partial trial balance. So if you take a look at your accounts, your 4,000 accounts are your revenue accounts. When you see revenue, you're thinking, hey, I think that's probably operating. The 5,000 accounts are your expense accounts. Again, you see revenue expense, you're thinking, hey, that's probably operating. Notice the 6,000 and 7,000 account. They use the word other. Anytime you see other revenues or gains, or you see other expenses or losses, you immediately think, bracket those two off, non-operating. Then you've got your 8,000 account. This is a loss on what? Box off discontinued. All right, so it's a loss and it's discontinued. Now remember, discontinued operations, when you see that, separate line item all the way at the bottom after your income from continuing operations, after tax, and the discontinued operation is always shown how? Net of tax, okay? And this is a loss, so this will reduce our income. Okay, the next thing I would do is, notice towards the bottom, before you look at all the accounts, we got some asterisks with some additional information, like the salaries. The salaries, while the total amount is, let's see, if you look at the pre-trial balance sheet, we've got 70, but they want us to allocate 50 of that is going to belong to sales, whereas 20 of that is going to be allocated, 20 is going to be for the salaries for the salespeople. The other 50 is the salaries for the officers. That's part of your general and administrative, okay? And you'll see as you work through problems, general and administrative is going to be things like this, the officer's salary, insurance, legal, accounting, things of that nature, okay? The last asterisk we have, the double, is the restructuring expense. Now, the restructuring is non-operating. Now, how do we confirm that? Infrequent. Anytime you see something unusual or infrequent, what are you immediately thinking? Push that down below. That's non-operating in nature. Now, as an analyst, you might get concerned, well, hey, are they trying to move operating expenses down below to non-operating? Limitation of the income statement, but we'll take it face value. Restructuring, that's going to be part of our non-operating. Okay, so let's go through the details. So we've got this company for a period of time, and they do different things. They've got sales revenue. Now, they must be selling goods because they have returns and discounts, but they also have service revenue. They also have rental revenue. How do I know those are not other items? Because of the account information. The 4,000 accounts are all revenue, not other, but all revenue. So this is all part of their good core business. So first thing we want to do is take our gross sales, the sales revenue from the goods, take your returns and discounts, the 25 plus the 530, subtract that from the sales revenue of 380. We want our net sales from the goods, so that would be 350. Then we have sales revenue from our services and rent. Add all three together. Total sales from our core business looks like then 350, the 200, the 100, 650. Now, multiple step income statement, we're going to want to subtract from that cost of sales. So we're going to have cost of goods, cost of services, cost of rent. If you bracket those three off, the 200, 150, and the 60, that gets you 410. So when we take our 650 total sales, we're going to be able to come up with our first subtotal, subtracting the cost of sales, 410, get to our gross profit. Okay, still working on the core business. Now we'll move to our 5,000, our operating expenses. So the 5,000 we have, let's see, we've got salaries, which we already allocated. 20 is going to be added to the selling. That's for the salespeople. 50 for the officers. That'll be general and administrative. The other three selling expenses we have is the freight out, the commissions, and the advertising. So if you add up the 25, the 40, and the 15, that's 80. So your total selling would be the 80 plus the salary of 20, 100. Now be careful when you see the word freight. I need to know, is it freight in or freight out? Whenever it's freight out, that's a selling expense, okay? When it's freight in, you'll learn later in inventory, that's part of your materials cost. That's going to be capitalized, part of your cost of inventory, okay? So don't jump on the word freight. Read carefully. Is it in or out? Okay, now we've got insurance expense. Now, insurance expense, that's part of our general and administrative, along with the officer's salaries, which was 50. So the 50 plus the insurance of 20, that's 70 for the general and administrative. Depreciation is going to have its own separate line item, as is the income tax expense, okay? They have their separate line items for those. And remember, general and administrative, you'll get examples, but your officers, your legal, your accounting, your insurance, etc. Okay, so that takes care of our 4 and 5,000 accounts. Now we're going to move to our 6 and 7,000 accounts. Bracket those off. Those are going to be our non-operating, our revenues and gains, our other expenses and losses, okay? So our other revenues and gains, our other expenses and losses. So in there, whenever you see interest, whether it's revenue or expense, if you're not a bank, the interest revenue, interest expense, that's going to be non-operating unless you're a bank, okay? And they get separate line items, just like the depreciation, the income tax, the interest revenue and gain. Sometimes it's netted out, but interest separate line item. Okay, we have other revenue. We have a gain on the sale of available for sale securities. That must be an investment. We have interest expense, loss on the sale of fixed assets, non-inventory. And then we have that restructuring, okay? So that's non-operating. So the last item there is the 8,000 account, the discontinued operation. That goes by itself, separate line item, net of tax, just before the net income, okay? So let's put it all together. Let's see what a multiple step income statement would look like. This is going to be your date for Friday night. Forget that Tinder. So here we go. We got the name of the company, an income statement for a period of time. All right, now notice the top part is all of our core business, from our net sales down to our income from operations. This is what we do all day, every day. So we've got the total sales, but net of the returns and discounts, 650. All the different types of cost of sales, goods, services, and rent. First major subtotal, gross margin. Okay, not bad. So we could immediately do a ratio. We've got a nice gross profit margin, I would think. Gross profit 240 divided by sales of 650, a positive 37%. Now, in the abstract, I don't know if it's all that good or not. You'd have to compare it to prior years, trend analysis, as well as the peers, but just stopping right there, not bad. Okay, now our selling, general, administrative depreciation. Selling expenses, that was the 80 plus the 20. And remember, that's freight out, your commissions, advertising, all that stuff. We've got general and administrative, the officers' salaries, right? And then we had the insurance, that was 50 plus 20, 70. Depreciation and operating expense, separate line item. So adding those up, 250. Wow. The income from continuing operations is a loss, a negative 10. Stop right there. Let's do an operating margin. From your core business, operating income, negative 10. Sales of 650, negative 1.5%. Immediately that jumps out. You can't make money from your core business. What happened? Okay, what happened this year that caused us to have positive 37% on the gross margin? What happened to our operating expenses, right? Why are we negative 1.5? What are the peers doing? Something unusual in the market. Maybe it's independent of us. It's economic. It's not, really us alone. It's everybody suffering. Or is it us alone, right? You got to do some digging. So all of that is the core business. Now we move to the non-operating, the other revenues and gains, right? So the other revenue, the interest, the gain on the sale of an investment, other miscellaneous revenue. And then we have our other expenses and losses. So our interest expense, we sold some fixed assets at a loss, the restructuring. So bracket that all off, the other all the way down to the restructuring, that's all your non-operating. Unusual or infrequent, not part of the core business, happen once in a while, but not part of the core business, not sustainable. So we get income from income before income tax. This is really income from continuing operations before tax, okay? So the income from continuing operations before tax, then we subtract out our income tax expense, which is 100, and then we have our income from continuing operations, albeit after tax, of 50. Alrighty. Now, the next item is the discontinued. Make sure on the exam you report that net of tax. The discontinued operation net of tax was given information, a loss of 25. That gets us our bottom line net income. Profit, okay, of a positive 25, yet our operating income was a negative 10. Now, what would your bottom line profit margin be? net income of 25 divided by your net sales of 60, a positive 3.8. Now, that's a pretty razor-thin profit margin there, no doubt, but at least it's positive. Yet our operating income is negative. We need to figure out what happened here, alrighty? So, the advantage, enhanced user information. We've got all this information ready to do our ratio analysis, and we get to see that all the bottom line net income was positive. We've got a big problem that our operating income was negative, and our income from continuing operations after tax was positive 50. Yet again, our operating income negative. Then we had the loss from the discontinued. What segment of our business did we discontinue? We need to dig into that. The footnotes. Why did they sell it? What happened? So, the one thing that jumped out at me, by the way, your income from continuing operations before tax, 150. Take a look at our tax expense, 100. What's that effective tax rate? 66.67%, man. That's pretty hefty. There's actually a legal name for a tax rate that high. It's called damn. What country are you doing business in? Because I don't want to live there. All right, now compare the multiple step to your single step. No subtotals. All revenue and gains get added together, we get 1,000. All expenses and losses get added together, we get 950. In one step, we subtract the 950 from the 1,000, and what do we have? Income from continuing operations after tax of 50. Then we've got our discontinued. Notice whether it's multiple or single steps, still separately reported. The discontinued operation, net of tax again, negative 25. Bottom line net income is the same. So notice, same result as multiple step, but a very different format. The performance, we just see we have a positive net income, but you know what we don't see? That the operating income is negative, which it obviously would be very important to a user of the financial statement. There's also no readily available details to do your ratios, right? We have no subtotals. By the way, the income tax expense, what if 100 were not given? How would you find that for yourself? Well, you'd have to take all your revenues and gains, the 1,000, and then add up all your expenses and losses other than the tax, which you would not have calculated yet, 850. You'd get 150, earnings before tax, then multiply it by that effective tax rate, damn, 66.67%, to get your tax expense of 100. Then that would get added to all the other expenses and losses, 850, get the 950, subtract that from the 1,000, there's your earnings before tax, income from continuing operations after tax of 50, then your discontinued, then your net income, okay? So that multiple step income statement makes for a very good task-based simulation. So please make sure you know the order, be readily available. In your head, not on a piece of paper, but if you write it, you will remember it, and you want to be able to accumulate your general and administrative and keep that separate and apart from your selling, okay? So, I don't know. You want to watch another lecture, balance sheet, or do you want to do some questions? I'll leave it up to you. Either way, I'll see you in a little bit. Good luck.